Howdy. So I've got some insights for you based on some recent interactions I've had with folks. I think a lot because people are thinking about tax season at this point for their short-term rental business. And so this is mostly going to be for folks who are newer to the short-term rental industry. But if you like to learn how other people manage their back end, this might be a good conversation to hang out for. So we're going to talk a little bit about receipts and tax categories kind of stuff and how we manage all that. We're going to talk about work days and we're going to talk about mileage. Okay, so I told you this is all back end kind of stuff in our short-term rental journey. And the first thing I want to say is I tend to talk to a lot of folks who are looking to leverage the short-term rental loophole as high net worth individuals, so offset their taxable income. And short-term rentals can still to this day be a really good strategy for that. But what tends to happen is these are folks who are really successful in their W-2 job but have never owned their own business. Okay. And so I will tell you, and I just want to share this because I think it's really helpful to know. I know I experienced some of this myself, like that little bit of sheepishness of, I feel like this is something I should have known and I didn't. But the reality is if you never owned your own business, why would you know? Okay. So this is some of that mixed in here. I just want to normalize that for you if this is you, if you see yourself in this. And so the first is, we do need to maintain a record of the expenses that we intend to report against our short-term rental income, right? And so a record is a receipt. And if you haven't been keeping receipts, that's okay. We do better when we know better. Make a note for yourself in case in 5 years you get audited that you didn't know. But, keep receipts moving forward from here on out. Some receipts, maybe you've noticed this, within a couple of weeks, the ink on them start to degrade. So you don't want to just pile them into a shoebox, which is sort of what we often hear people do. You want to get you want to have an electronic copy of that quickly, right? So think about your workflow around receipts. Now, a lot of us order things online, and that's really easy. And if you're using bookkeeping software, a lot of times they have a built-in way that you can just forward a receipt that you have in your email to your bookkeeping software, and it will auto hook up. But if you don't have that or you haven't figured all that out yet, there are other ways that you can manage this too. So I'm in the Google ecosystem, and they have a scan button pre-built into my Android phone. And I've connected that up to a folder that I call scan because I scan lots of stuff in. And it's a button right on my home screen. So I get a receipt at the store, and I will, if needed, make a couple notes on it if it's not super clear what it is, or I'll literally in the parking lot, I have a pen in my car. I'll just make a quick note, or I'll do the math really fast if I know I'm going to categorize that receipt into a couple of different categories. I will do the math right there and make note on the receipt, and then I'll scan it in and it'll go into my scanning file. Now I have my boss routine is Finance Fridays, and so every Friday, every other Friday, I go in and I clean out my scan folder. I send receipts and attach it to those expenses and make sure they're categorized appropriately. I remember when I first got into this, the first year I did taxes, I wished I had looked at a Schedule E, which is the form for rental properties that you'll be using. If you're planning on claiming material participation, it would be a Schedule C. The categories are going to be the same regardless. Anyway, so, but look at how those expenses get categorized and what categories they roll up to. So they're going to get reported under the same categories regardless. Now, if you are working with a bookkeeper or you're doing this yourself, those are pretty broad categories. And I personally like to track different kinds of expenses at a more granular level. So you can ask your bookkeeper or you can set up your system yourself so that, say, under supplies. So I like to track what are those supplies that are specifically consumable supplies for guest stays. So welcome treats, toilet paper, all that. So I can sort of gauge the cost per guest that I spent at the property, as opposed to things like caulk for the windows or cleaning things for the property, or things like that. Those are a different kind of supply. So I'll further break those categories down into meaningful categories for me in terms of my management oversight of my business. Okay. So you can absolutely do that, but it's helpful if you start by understanding what's on that Schedule E or Schedule C when you go to categorize your expenses. And if you just have one property, like QuickBooks is a fairly expensive way to go, and it's extremely robust, so you probably don't need it. There are some free ones out there that you can use. I personally have tried many, but I really like the customization of Quicken for business and home, and it's like $100 a year or something, and it works well for me. But there are other ones. If you currently use software to help manage your personal finances, you may just be able to tag expenses and account for them in that way. So you figure out what works for you, but ultimately the goal is that you're able to have a record of those expenses and categorize them and add them up at the end of the tax year. The second thing I wanted to just note that I think is helpful to talk about is work days. And this is a question that comes up often, in part because the guidelines don't tell you what a work day is, right? So it's actually left to us to define it. So if you have a CPA, I'm not a CPA, I'm not a legal person. None of this is advice that could be construed in such a way. However, I have been in the room many times with many CPAs. I've heard many different responses to this, but they are all consistently at least 4 hours spent working. Most of them say as many as possible. I've heard one say this, and based on my personal experience, I worked in a highly regulated industry. I worked with auditors all the time, accreditation, all of these things. And the thing that a lot of auditors like is that you have written down your procedure, aka a policy or procedure, and you've adhered to it. So even if you're wrong, if you've been consistent about how you've done it, that's okay. So I would say, as I did, I wrote down that 5 hours is a workday for my business because I most frequently heard go more than 4 hours, maybe 6 hours, maybe 8 hours, whatever works for you. And I also allow that my travel time is part of that workday because both of my properties are at least 2 hours away. And if I'm going there for work, that travel time is time I'm not spending with my family. And it's not, a 20-minute commute to an office, right? It's a substantial part of a day. And so if I drive 2.5 hours and I spend 3 hours working at the property, I count that as a work day. Okay. And you need to track those too. And also you're going to want to track why you were at the property. So whether you're tracking it in your calendar or you're tracking it on your mileage tracker that we'll talk about in a second, that somewhere you're maintaining a record of it and you're maintaining that record for the full 7 years, right? Because you need to be able to, if again, in 5 years you get audited by the IRS, you want to be able to say, here are the number of days I was at the property. Here's what I was doing on those work days. Here's what I was doing on those and then, I had so many personal days. And as a reminder, if you have more than 14 days of personal use at the property, you no longer can count everything as 100% business. You have to apportion out the percentage of personal use to business use and allocate expenses accordingly. And then finally, I was just going to mention mileage. So this is another thing that comes up. We want to be able to take advantage of the fact that we likely are using our personal vehicle for business purposes for our short-term rental. And so you can track that mileage. And either you could charge your business for that mileage, or you could just take it as a deduction from your income, which is probably what most people do. Again, so there are apps that can track your mileage for you. I have used them and found that because I drive a lot personally, I have almost teenager and a teenager and all the busy mom stuff. So I'm always driving for personal reasons, and I don't drive a ton for business purposes. So the apps drive me crazy because they're always cataloging my drives, and I'm like, I only drive for business a couple times a month. So I don't use an app anymore for that. I just have a Excel spreadsheet, and I actually turned on my Google location tracker for the days that I'm going to be traveling for business. So I can go back and just capture that really, really easily because it tells me like the mileage and everything. And then also on my tracker, I note what the purpose of the mileage was for. So that's how I maintain record of those work days is I've had to travel to the property. Here's what I did while I was at the property. And I don't get super, super detailed. I'll just number of hours and what I was doing that day. In sort of high level. So I think that covers it. So receipts, maintaining a record of your expenses, different ways to think about bookkeeping, checking out your Schedule E or your Schedule C tax categories for cataloging, maintaining a record of your work days, and different ideas around mileage. So I hope that was helpful. Give a subscribe to get notified of when I post the next video. Okay, take care.